Hello, everyone, and welcome to the Oklahoma Venture Forum podcast. I'm your host, Kyle Golding. I'm joined today by Tracy Poole, managing partner at 46 Capital in Tulsa, Oklahoma. Good to see you today, Tracy.
Good to see you, Kyle. Thanks for having me.
Sure thing. Now, Tracy's going to be on our state small business incentive funding panel discussion in October 11th, for the first OVF meeting of the year, the first of three in Tulsa. We're going to be in Tulsa physically, and Tracy's going to be on that panel. We're going to be discussing small business incentive funding. There's a lot of money coming from the federal government and other resources coming into Oklahoma, coming into Tulsa specifically. So, Tracy, let's start off by giving us a little bit of background about yourself, about 46 Capital, and then we'll get into the discussion about this small business incentive funding.
Oh, fantastic. Well, thanks, Kyle. The background on me is a long story, so I'll try to make it somewhat short. I'm a lawyer by training. I've been a commercial lawyer for about 30 years, all transactional practice, and then have gone in and out of law firms. I was the general counsel of a hedge fund in an energy trading company here in Tulsa for a while. And then I've had my own businesses, so mostly in the upstream oil and gas space, where I had 2 or 3 exits, knock on wood, that enabled me to be an angel investor. And I've been an angel investor for about 20 years. But, I'm an Oklahoma guy. I was born in Europe, actually, but started living in Oklahoma when I was about 4 years old or so. My dad was a career Army guy and last stationed in Southwest Oklahoma, so I lived down there. Went to undergrad at Oklahoma State, go Pokes, and then law school at the University of Oklahoma. But I'm an Oklahoma State guy through and through. I've got a little Oklahoma State truck behind me that you might see that we like to play with from time to time. But yeah, I've been an angel investor for 20 years, and we started 46 Venture Capital about a year and a half ago to really scale what my partners and I were already doing in the angel space. So I've been a tech investor for a long time. And now we're taking in outside money. We manage 2 funds now. One is a traditional venture capital fund that we started with, our flagship fund that we call our Kinetic Fund. We invest in energy tech, health tech, and what we call digital transformation out of that fund, which is really a broad bucket that gets all things digital, software, cyber, AI, robotics, you name it, kind of all fit that. And we have had our first close in that fund, 10 million on our way to 25. We were making our 4th investment next week out of that fund, soon to make the 5th, which is coming right behind it. So off and running there. And then our second fund is really unique. It's something that we are doing in partnership with the University of Tulsa. So it is a fund that we own, raise, manage, and deploy, but it wraps around all things University of Tulsa. So if you think about their alumni or their students that may have businesses, or tech transfer, commercialization of things that they're working on over there, or just things that are strategic to TU that they're interested are on the plate as well. So that one is a slightly different structure. We structured it as a rolling fund, which is a series of quarterly funds. We had our first quarterly close this quarter, and we're making our first 2 investments out of that fund, I'm pleased to say, here in the next 2 weeks. So they've been approved by our investment committee, and we're going to start writing checks. So that one is got a little bit broader focus, really into all things TU and things that they're into. They're a top 25 cyber school, so there's some really cool stuff coming out of there. They've got a really good healthcare presence. They've got some good research chemists. As far as upstream oil and gas and midstream oil and gas, they probably got one of the best petroleum engineering schools in the country, and for certain, the best research facility on their North Campus. If you haven't seen that, come on over. We'd love to give you a tour. So we're really trying to exploit those things and make some good investments around TU as well.
It's an amazing time to be in Tulsa right now, isn't it?
Oh, it's crazy. Yeah. To think that we were able to even start a fund and kind of get this ecosystem going in conjunction with a whole host of other people is really amazing. I mentioned I've been investing as an angel in this part of the world for over 20 years, and the activity we've seen in the last let's say 3 to 4 years has been truly amazing. There would be sometimes when you might see 10 or 12 deals a year, and one is kind of interesting. We're looking at deals in our fund structure at the rate of about 600 deals a year, and we're picking 25. So it's night and day different than it used to be, for sure.
Amazing. How was it for you personally to transition from an angel investor to working within a fund and having partners and being more essentially more structured?
Well, the good news is, based on my background, it was not all that difficult, because I'd spent a lot of time in securities law and corporate law, and then had represented different fund structures, whether it be venture, private equity, hedge fund. I was the general counsel of a hedge fund that was about a $4 billion fund in Chicago for a while. So this is all stuff I'm very familiar with. So it wasn't difficult to start. It is difficult in the sense that when we're raising third-party capital, this part of the world's really not used to venture funds yet. So there's a lot of education there, and the capital raising is difficult, just like any business. But we're making some really good headway, and that's just been an amazing ecosystem here, not only Northeast Oklahoma, but Oklahoma in general as of late.
Plus, you have a second office in Bentonville, Arkansas, as well, right?
We do. We do. We have a small office in Bentonville, and a really super cool building over there called the Ledger, which is a bikeable building to the fifth floor. Northwest Arkansas is really keen on mountain biking, and they built this just awesome building that's bikeable all the way to the fifth floor. But yeah, we have an office there, and so really being plugged into what's going on over there in terms of things that, and we're not so much a consumer product group of funds, but there are a lot of things that touch concern that, like marketplaces, a lot of digital, a lot of folks that are probably the best supply chain folks in the world are over there. And so to be able to hang out in that environment has really helped us and helped our investors and helped our fund as well.
There's seems like an amazing amount of synergy between Bentonville and Tulsa as well.
Yes, and I think that's picking up, even as we speak. We're working on an angel investor summit between us and 412 Angels, and two or three different groups that have a lot of sort of disparate angel investor groups, and trying to pull everybody together right now. But yes, it's real close to Tulsa. There's some real commonalities. There's a really great research university over in Fayetteville that's pumping out some really interesting things, and just super bright people that are eager to get to work on this stuff. So it's been fun.
Cool. And so now OVF is having our first of three sessions, or three meetings this session for 23 and 24 in Tulsa. We've been talking about it a while. We're coming for our first one, October 11th. You're going to be on this panel. We're going to be discussing the huge influx of federal money that's coming to Oklahoma through Build Back Better programs and other things at the federal level. A lot of it that was started during COVID, et cetera. So what are some of the things that you're seeing? What are some of the ideas that you guys have? How do you think Oklahoma is going to maximize this investment that's coming in from the federal government?
Well, that's super interesting, and we've been a direct beneficiary of that to some extent. So you mentioned the next OVF meeting, and so the panel there are going to be inclusive of a few of us venture fund managers that have received some of these funds through OCAST. It's administered by OCAST here in the state. But they're actual federal dollars that come from ARPA, which was the American Rescue Plan Act that happened really as a result of COVID, or during COVID, to try to stimulate some things. But what's happened here recently, and what OCAST has done, is they were pretty bright in that they were able to tap into some of these ARPA funds, and did a really good job pulling over $50 million into the state to invest in various things, mostly venture. But what they've done is they came up with a way to have some of the various venture investors in the states apply for a portion of this funding, and then that funding was allocated directly into our venture fund that we can turn around and invest in businesses in the state. There's some restrictions related to what we can do that are really guided towards, promoting those things that we want to promote here in the state in terms of venture. But it's been a good thing for us. It helped kind of get us off the ground in some ways and really sped up a little bit of our early fundraising. And there are 4 fund recipients, and I think we'll all be represented on that panel along with Jennifer McGrail from OCAST, I believe, and maybe Dan Luton. Just an incredible staff over there. They've been great to work with, and they've got us off to the races. We've made a couple of those OCAST style investments so far, and they're going to bring jobs, and one of them in particular is going to bring some manufacturing to Tulsa. So that's super exciting, and they're walking the walk. They're doing all of those things that they were designed to do, and then some by being able to grab some of these federal monies and really put them to good use.
So how's it been dealing with it's OCAS, but it's coming through the federal government? I'm sure there is a ton of paperwork, a ton of red tape, a ton of how they like it done, which is different than investments you control the process. So what has that difference in approach been like for you, and how have you guys embraced that?
Yeah, it really hasn't been too bad. I think applying for the money was the most difficult part whenever you're responding to a pretty thick RFP that loops in not only state but federal regulations and things that are administered by the Small Business Administration. And so there's a lot to it. But at the same time, they're very interested in streamlining what they could. And I think OCAS did a good job at that, and really has worked well with us on the recipient side to decide, here are the reporting, for instance, reporting and, other guidelines that we have to follow. Here's what they are. Now, how do we best work together to ensure that we're, providing what we need to provide to put, Oklahoma on the best plane possible with the feds, but then also do it in a way that, makes sense and is not, overburdening people. I think they've been really good about that.
So if we were to maybe look ahead 5 or 10 years and have a discussion about this ARPA funding that came through OCAST and it's being administered locally, what would be your hope that how the landscape looks by the use of these funds and how we've managed them and put them into play?
Yeah, well, I think the whole scorecard, if you will, for all of us in this process will be the impact that's created. Not only investment returns, because obviously our main reason to exist is create fantastic returns for our investors, and which in this case would be the feds through OCAS. They came into the fund just like any other LP. But the impact to the state. So a lot of the things that we're doing with regard to investing this money is making sure that we can have a measurable impact, and that could be through jobs, that could be through advancing technologies that the state is really into, or things that we're good at, focusing on our strengths. But that impact, the scorecard will be filled out, and so the impact will hit home. Now, with the nature of venture funds, of course, most of these businesses that we invest in are going to take, 5, 7, 8, 10 years to sort of mature enough to have an exit. So it'll be a little while before we know exactly what those impacts are. But I can tell you from day one, the way they're being measured, we'll all know, and they'll all be able to be communicated. And it's pretty exciting. What I've seen so far from the 4 recipients is we're all doing, I think, a really good job of being intentional about how these monies are used.
Very good. And obviously, as soon as that money starts circulating, we start talking about job creation and the trickle effect of cash flow, as well as eventually what the companies become. Right.
Sure. And it's the easy part is to talk about job creation. She said, hey, we go invest so many dollars, and our investments through this program usually have to be matched at least 1-to-1 by outside investors, which are other investors in a deal. So those are the kinds of things that are kind of easy to think about and easy to follow. But I think what gets lost sometimes as well as just the wealth creation that's going to be happening in some of these things. So for these businesses that are successful, not all of them will be, but a good portion of them will, I think. Those founders are going to be wealthy. It's my job to take a founder and try to make them as wealthy as humanly possible. So those are the things that are really the intangibles that are out there that are going to be enormous. And then those folks, when they have their exit, have money to invest. And the nature of things for most entrepreneurs is they're going to turn around and do private deals. They love the state of Oklahoma. They're going to come back and invest and help the ecosystem, and that could be helping, all different portions of the ecosystem that you and I sort of are familiar with. But as we see, time and time again with folks that do have an exit, they tend to come back and play again. So those are the things that are really exciting when you think about it.
So we'll create a very positive economic snowball from this whole process.
Of course.
And there's always huge advantage to bringing money to the state from outside the state. There's huge benefit. We could grow so much with our homegrown money, but when we get money from out of state, whether it's from the federal government or from investors who are coming across the state lines, that has an additional impact on the economic ecosphere as well.
Exactly. And people are paying attention to Oklahoma, so to your point, even other private LPs or private investors, whether they be fund investors or angel investors or folks that like to do just direct privates and things like that, folks are paying attention. So when you see the federal government lob in some money and you see it administrated really well through OCAST and invested really well with the folks that are, charged with doing that, like us and, a few other funds, they pay attention to those movements of capital, and they're trained on us right now. And so we see somebody at least once every couple of weeks coming through the incubator here where we have offices that are trying to figure out, what it is that's happening in Oklahoma and what it is that we're doing over here, because they keep hearing about it. So that's very positive for all of us.
One of the interesting things about our panel discussions often is we have people from various backgrounds and various approaches, various techniques about how they work. And I predict this panel will be equally diverse. So let's talk specifically about 46 Capital and about your Kinetic Fund and how you approach investing.
Yeah, so we're very early stage, so we're pre-seed to Series A, and probably more biased toward the pre-seed and seed part of the business, which is early. In some cases, we're the first checks. In that case, investing is a little bit more art than science, in that you have a little bit less data to work with. It's more founder driven, probably a little less idea driven, more about execution, things of that nature. But we're very, our firm in particular is very fundamentals focused. We try to get things back to first principles, whether we're dealing with a certain market segment or a certain investment idea or a certain, way of generating revenue. We try to peel that back and first decide what's true and then build from there and see if we can do that with this team, So, it's an approach that's always worked well for me. I try to understand the space. I try to understand the business. I try to really get to know the founders and understand it's a long-term relationship. And, at the end of the day, as a fund, we can help founders with a whole lot of things, whether it be marketing or hires or, figuring things out in terms of modeling and all that, but we can't teach them how to be ambitious. You just can't do it, So we are first and foremost looking for those founders that are ambitious and that will never quit, that will never say die. They'll run through a brick wall and are somewhat coachable, at least to the extent where we have some domain expertise that can help. We don't always, but we try.
Right. That makes perfect sense. Well, I've mentioned this a couple times. I'm going to reiterate as we close here that OVF is going to Tulsa. We are going to be in Tulsa on October 11th. Tracy is the founder and managing partner of 46 Capital. He's one of several people that's going to be on this panel talking about the money that's coming from ARPA and from the Build Back Better and all of this good funding that's coming through OCAST. I appreciate you, Tracy, spending some time today, giving people an idea, a taste of what they can expect on that panel discussion. And again, OVF is going to be in Tulsa for our first of our 3 meetings this session, October 11th. So make sure that you guys sign up for it. It's going to be at 36 Degrees North Base Camp, which is at 36 East Cameron Street. There's several 36 degrees around town, so we'll be at base camp. We're super excited about that. If you can't make it in person, there will be a Zoom option if you're in Tulsa or if you're in Oklahoma City and don't make the trip up. Although I highly recommend everyone get to Tulsa, see what's going on there, meet Tracy and the people that he's working with up there, and continue our relationships with our partners in state and out of state too, from Bentonville and all the way from Washington, D.C. We're all working together to make things great. Tracy, I appreciate you being on the podcast today, giving us a little bit of insight into this panel discussion, and I'm looking forward to being in the room with you in Tulsa on October 11th.
Oh, thanks, Kyle. And yeah, everybody come see us in Tulsa. We're excited to have OVF over here for this meeting. And, 36 Degrees North Base Camp is a great place to be. I'm actually in the High Growth Incubator, which is another version of 36 Degrees North. I'm on the board of that entity, which is just so fantastic. So anybody that comes over, if you want to come over to the High Growth Incubator and get a tour of that as well, I'll be glad to bring you by.
We are super excited to be partnering with 36 Degrees to make these 3 events happen in Tulsa this session. So, Tracy, thank you so much for spending time with me today. Thank you to 36 Degrees and what they do for being our partner. And we look forward to seeing everyone in Tulsa on October 11th.
Thanks, Kyle.